Presenting the SBI Automotive Opportunities Fund. Benefit from India's growing automotive ecosystem. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello, good afternoon. You're watching Market Fatafat on ET now. I'm Vinay Motiwala with me, Shell D'Souza as well. Shell, very good afternoon to you. Good afternoon. Surely shaping up exactly at noon when we started seeing those all-time high levels.
Absolutely. We thought that markets will still be sideways, hold on for another week. But there you go. Markets always surprise you. And we've not only scaled past or hit a fresh record high levels in today's trading session, Vinny, we scaled past 22,800. We are comfortably above that level as we speak. So yes, great going for the benchmark indices. And also not just that, you have a Sensex that is a few points away from its fresh record high levels as well. Last time I checked, it was approximately 250 odd points or 300 odd points away from those record high levels. You have mid-cap index, which is at a record high level. So yes, Nifty Bank no doubt is a tad bit subdued, like in the sense that it is not yet made those record high marks, but yes, it will also catch up very soon. Beyond 49,000 mark is where Nifty Bank had its record high. So yes, great going for the market, surprising us almost 2 weeks before we could get the results.
Absolutely surprising us before, overall the election results come in. But, we also, the editor's take, let's listen to that on what we had to say in terms of Nifty hitting new highs as well as in terms of the mid and small cap, because they have not yet seen a catch-up. So let's listen in.
Okay, now all-time high, the ring is always nice, right?
Yeah.
I mean, all-time high, just say it again.
All-time highs.
Ring is always nice, right? You always enjoy it. Now, mathematically, when you look back and you would say, this is just a number and it was a great day to track markets. But you have to understand that what has changed in the last 10 days and what will change in the near term. What has changed in last 15 days is this entire view which the markets took versus what they're taking now in terms of what the election verdict is. See, the only problem for the market in last 10-15 days was and is FI selling, which is a function of what view they've taken on emerging markets and which is a view what FIs have taken on election cycle. From first phase to second phase to third phase to fourth phase to fifth phase, the political commentary by political commentators seems to be endorsing what markets want to hear, which is that there is going to be continuity of the government and they will come back with a majority. That narrative was not such a strong narrative at the end of the second phase, and that made market nervous, and now that is reversing, which is leading to a bout of short covering. That's part one of the story. Part two of the story is that while we may like to look at apps, in Indian markets in isolation, let's not lose sight of what's happening in the world. The world is also at an all-time high. So you're not unique, you're not special. We like to think you're unique, you're special, but the fact is that you're catching up with what the global trends are. Nasdaq all-time high, S&P all-time high, European indices all-time high, Japan not far away from its all-time high. I think it touched a new high a couple of weeks ago. So you have a very strong drift which is there towards global markets. Within that, you had a local event which created some degree of nervousness. Then your market cap $5 trillion. Then your level of participation. So now the market positioning is such that the nervousness, the anxiety, the anxiousness is over. Now markets are approaching the event, which is an important event, 4th of June event, with not feather-light positions, with fairly high degree of commitment and with an assumption that whatever you will here get on the political front is something what markets are prepared for.
But what after June 4th, Nikunj? Do you think it will mark the top and then it will be sideways again? Any thoughts there?
See, there is a good old saying on the stock market that you buy the rumor and sell the news. Now, what is the rumor in this case? Or what is the belief?
That the government is going to come back.
The current setup of continuity does not change. So if you bought stocks with that view, saying that, okay, I'm playing for the election, then maybe closer to election, a day on the election, a week after the election, this market may just top out in specific pockets, specific corporate groups, specific themes. It may just top out. Interestingly, I've never seen such a bipolar market. For the longest time, I've been tracking election cycles. FI shorts, DI long. So one end of the market is excited, another end of the market is deeply hedged or is very cautious. If markets like what they want to see, the long haul guys, which is typically FIs who count in terms of years, they will say 3-5 साल के लिए वापस आते हैं. What will you buy for 3-5 years?
Large caps.
Large caps. That's where the comfort is. So you actually could have a reverse, which is that the obvious beneficiary may peak out, and the indirect beneficiaries, which you never thought would be the ones which would be direct beneficiaries, may actually start coming back.
Talking of beneficiaries, names like Adani Group stocks also 5-6% higher. Not that I'm saying they are direct beneficiaries. Market sense.
See, there are some obvious pockets where you know that markets continuity is something which will not change the pulse. That is the obvious trade. That is the easy trade. It may extend itself, but your scope of making money on that obvious trade is less now. That obvious trade we spoke about 10 days ago. That was the obvious trade which you should have bought when we say the last hurrah in the market is not over. Now is the inobvious part. The inobvious part is that where there is short positions in the market and where there is scope for greater delta if flows come back. And that I see in the large cap stocks which are FI dominated. I could be absolutely wrong. I'm purely putting facts on the table, and facts are pointing to the fact that the obvious trades may peak out, then obvious trades is where you will actually see greater amount of elevation.
Okay, surely keeping an eye out on the markets. Interesting move coming in today. 250 point from the day's lowest point, I believe, that we have seen for the Nifty 50. That's something very, very, not that we see too, but nowadays it's something that is becoming a normal, I believe. But let's keep an eye on that. But with that, let's get started with all the stocks that have been buzzing in trade on the back of news flows and on the back of technicals. And on the technicals, today we have Vinay Rajani joining in with us, while from the research team, we have Gaurav as well as Jinay joining in with us. Very good afternoon to all three of you. Good afternoon to you as well, Cheryl. And let me start with the first stock that we should talk about, Jubilant FoodWorks. It's lunchtime. Time to order in some pizza or no? But what brokerages are saying is that, the numbers, yes, they were in line with what the street was expecting. Jeffries maintaining a hold. They've cut the target price to 475 from previous target price of 500 rupees. They said they saw a stabilization coming in the like-for-like growth. It was quite flattish this time. And overall, the growth focus is going to be there. And that was quite visible in terms of the con call. Overall, when you look at it in terms of Jubilant Food, they have transformed from India to one of the largest emerging market franchisees now, and that's interesting. DP Eurasia is what they've taken over as well during the quarter, so that was an interesting move. And other than that, JP Morgan is also maintaining a neutral rating. A different stance this time from JP Morgan versus a Jeffries is that they've hiked the target price to 515. So let's keep an eye out on that. But what we also had is that in terms of the con call, we did listen into the management talk in terms of the margins, what is the growth and outlook going forward. Listen into that.
Is on volumetric growth, acquiring customers, and gaining market share. We'll continue to innovate on the portfolio, sweat our assets, get more customers, serve customers multiple times. So therefore, both focusing on value and the premium end will on the products that we launch will continue across brands. We'll expand occasions and category share through new brands like chicken, coffee, and Indo-Chinese food. The annual network guidance for FY 2025 will be 180 stores for Domino's India, 50 for Domino's in Turkey, 20 for Domino's in Bangladesh. In coffee, we intend to open 70 stores. In Popeyes, our guidance stands at 50 restaurants and 25 for Hong's Kitchen. I don't think margin dilution should happen further, at least from this point on. I think that's the only thing I can say at this point. We'll do the right thing, right, from a growth perspective, investment perspective. We are maniacally focused on return on investment and payback periods. So those financial discipline we will not lose.
All right, let's move on. Let's talk about Digit, the new debutant on the D Street today. When it actually debuted on the D Street, Vinny, it saw a premium of about 5% or so. And now the stock has seen a good uptick of about 14.7%. Remember, the digital insurance company is backed by Canada's Fairfax Financial and has a car, bike, travel as well as health insurances. So you saw a good subscription coming in for actually the IPO as well. It was oversubscribed by about 9.6 times. But we also caught up with the management. My colleague Anurag Shah, in fact, caught up with the management right after the listing. Let's hear what they had to say.
I think we already said that for us, listing is more a responsibility. Taking money from investors, especially mutual funds in India, are big. They raise money from retail investors, so it's a responsibility. We'll do our best. And as for plans, I think it's a big milestone. But I think the way we see it is in a long journey. I think this is one of the milestones, very important one. But the journey continues.
Okay. If we talk about the general insurance sector, the penetration is still 1% only, and going ahead when we talk about the $5 trillion economy, so how much opportunity is there for overall general insurance space, and in that opportunity you will also get the benefit out of it?
I think India's penetration, everyone knows that 1% of the GDP is really small. So I'm hoping that in the next 5 to 10 years, even if we move from 1 to 1.3, 1.25% of the GDP, the opportunity for growth is just enormous. And I think as long as India does well with...
Okay, that was Go Digit, the new listing, new debutant on the T Street today. But let's move on, and Vinay, Tech Mahindra, this one is really making the list of all and most of the analysts, technical analysts that we have. Vinay, what are you keeping as a target here for this IT company?
Yeah, so good afternoon. So today, Nifty IT index has surpassed the crucial resistance of 200 days exponential moving average. Previously, couple of sessions back, we saw some momentum coming back, and again, we saw profit booking. But again, today it has resumed its uptrend, and overall IT index has given a fresh breakout on the short-term charts. So amongst all the IT large cap stocks, if I were to pick only one stock, then Tech Mahindra is the only stock which is actually trading above its 50, 100 and 200 days moving average. Rest of all the stocks which are trading below their long-term moving averages. So relatively the setup of Tech Mahindra from the IT space looks the best, and I think it is headed for the new all-time highs. So not all-time high, the recent 52-week high was 1416. So I'm expecting at least 90 to 100 rupees upside from this level, because this is the strongest IT stock we can say on the technical basis. And as far as support is concerned, there is a support around 1290. So keeping that stop loss, one traders can continue to hold on to the long positions, and overall bias and the trend of the stock is bullish, and I'm expecting a level beyond 1400. So yes, it is one of the best placed IT stocks, at least on the technical basis.
All right, best placed IT stock, at least on the technical basis. That's the word coming in for Tech Mahindra. But on that note, we'll slip into a break on this edition of Market Fatafat. When we come back, we'll discuss more stocks. Don't go anywhere.
Welcome back. You're watching Market Fatafat on ET now. Let's keep it going with the stocks that have been buzzing in trade today. And HEG, Gaurav, this one is in focus today, seeing a bit of a decline. What is the reason?
If we talk about HEG, now the stock is down almost 9.5%. And if we look at the reasons, one of the reasons being that if we look at Q4 results, those were actually quite weak. So revenue was down almost by 11.3%. If we talk about net profit, that has gone down almost by 67%. And even if we talk about EBITDA margins, now they have come to 7.8%, which is a downtick of almost 1200 basis points on a YY basis. But apart from that, there are other things that we need to focus on in the company. The one thing is that now the board has now approved the demerger of graphite business into a new company. The demerger will result in a share swap ratio of 1:1, and at the same time the existing company is going to become a platform for green energy business. And apart from that, board has also decided to merge Bhilwara Energy into HEG Limited. Now this proportion is going to be like 8 equity shares of HEG Limited for every 35 equity shares of Bhilwara Energy. Now today the stock is reacting on the back of the numbers, but now that the company is going with demerger, we will definitely watch out on how it plays for the company in the days coming ahead.
All right, so that's all about HEG. Vinay, coming to you then, Axis Bank, why is this one in focus?
And volumes are also convincing today. Bank Nifty has started outperforming the broader markets as well as the Nifty, and after a long time we have seen momentum coming back into the Bank Nifty. And if we were to talk about other private sector banks, Axis Bank is the strongest chart we can say, because during the bad time it did not fall and actually was into consolidation, and now today it has given some momentum buying. So overall setup of Axis Bank is quite good. I think it has also come out with a very good results. So that is also a supporting part. So I think from here on, banking sector can perform well, and Axis Bank is the stock which is looking technically very strong amongst all private sector banking stocks. And Bank Nifty has also given some fresh breakouts on the chart. So I'm expecting this stock to make a new all-time high beyond 1183. So right now 1161 is the price. So I think overall it is a very good stock. Today's low should be the stop loss for the traders, which is around 1125. So keeping that stop loss in mind, traders can remain long, and we can continue to trail the stop loss as and when we see stock going up from here. So good chances, good potential to make an all-time high and beyond that level. So 1125 becomes the strong support and stop loss for the traders.
Okay, let's move on to the next stock that we should be talking about, and we'll talk about PG Electroplast. That's the stock that we're keeping an eye out on.
But
before that, let's go to Vinay.
Yeah, let's go to Vinay and ask him about Minda Corp. I'm very sorry, I'm very confused with a lot of rhyming names in the show today. I thought previously I was tossing to Vinay, but it was Vinay. Now Vinay, really coming to you, Minda Corp.
Yeah, so the numbers were pretty mixed. The revenue came in at 1,215 crores. Versus 1,075 crores, which was an uptick of around 13%. If we talk about net profit, it was significantly down by 42%, came in at 71 crores versus 122 crores same period for the last year. If we talk about operating performance, the EBITDA saw an uptick of around 18.5%, and EBITDA margins also saw a slight improvement, coming in at 11.4% versus 10.9%. The management said that the growth was partially offset by the subdued exports and a lower demand in the ASEAN markets. For FY 2025, the upcoming monsoon season, festive season, stable pricing movements with improving rural and urban market sentiments will further drive the growth.
Thank you so much for that update on Minda Corp. Today down and out in trade. But PG Electroplast, now coming to that, Cheryl, do not get confused, it's my turn. Yes, that's the stock we're keeping an eye out on the back of its earnings. Look at the up move that we've seen. A very strong set of numbers was reported by them. Look at the growth itself. Revenue up 30%, 1,000 crore. 1,076 crores is what the revenue came in at. Profits up 78%, while operating performance was also quite strong because EBITDA margins have seen an expansion of around 200 basis points, as well as overall in terms of the operating performance has been strong. The EBITDA seeing a growth of 56%. All in all, they've managed to see a very good set of numbers this time. Profits, revenues, everything seeing a very sharp surge. And that is the main focus. It's an industrial manufacturing company. It's a global brands is what it manufactures for. And that is why it's an electronic manufacturing company. So keeping an eye out on PG Electroplast after a very strong set of numbers was reported by the company today.
All right, let's talk about Saregama then, and that particular counter is soaring in trade today. It reported its numbers a short while ago. The consolidated net profit for the company rose by about 23.1% on a year-on-year basis, coming in at around 53.8 crore rupees, while the revenue from operations saw an uptick of as much as 29.2%, coming in at around 263 crore rupees. Sequentially also, if you see, the numbers have actually reported a healthy set of uptick. So the PAT is up about 3%. The revenue is up about 28.8% also. And other income actually saw an uptick of about coming at around 17.9 crore versus 17.2 crore in the quarter gone by. On back of this solid set of numbers coming in, where the profit has seen a good uptick, the revenue has seen a good uptick, you can see the stock is actually seeing a good day, 12% uptick coming in on Saregama.
Absolutely, 12% uptick there. Let's move on. And Vinay, you picked out one more from the IT side. That's LTIMindtree. What are the charts indicating for this one? Similar to what you spoke about before as well, given that the IT pack is seeing such a good up move.
Yeah, so good thing about LTIM is it is looking extremely oversold on the weekly and monthly chart. And if you were to talk about the high which was registered in the month of January this year only, the high was 64.42. In the month of January, it hit that high, and from that level, it has come down to 4,800 levels. So recently, we can observe that there is a strong upward sloping trend line support, and from that level, it is again and again moving up. And from the long-term support, after getting oversold on the chart, it is trying to give some pullback rally from here. So there is a great potential here because stock is looking oversold, and for the investor and positional trader, it becomes the best setup to buy a good quality stock which is having good liquidity as well, and one of the large cap stock in the IT space. At this level it is available, so I'm expecting a nice pullback from the current level, and the 200 days exponential moving average for this particular counter is placed around 5140. So right now levels are 4800, so almost 250 to 300 rupees upside could be there in the stock from here. So and as far as support is concerned, I see support around 4650, 4600 odd levels. So keeping that support in mind positionally, you can expect this stock to reach a next target of 5140 to 5150. So convincing chart pattern is there.
Alright, moving on then, Jinay, coming to you. Let's talk about Garden Reach, and why is this one in focus today?
So the company has reported a very strong set of numbers. The revenue was up around 70%, came in at 1016 crores versus 601 crores same period for the last year. And net profit soared at 101%, came in at 111 crores versus 55.3 crore year-on-year basis. If we talk about operating performance, the EBITDA grew around 347%, came in at 91 crores versus 20 crores year-on-year basis, and the margins also saw a good improvement, came in at 8.9% versus 3.4% year-on-year basis. Well, the management said that they are confident on the sustaining this growth in coming years too, and the focus ahead will be on improving the efficiencies, the timely execution for the ongoing projects, and adoption for the new technology. Well, the street is clearly seeming reacting positive to the stock is up trading about 17%.
An ad on Garden Reach, but Vinay, you've picked out SBI. On the charts, what are you expecting from this PSU name? Where do we see it headed? Currently trading 831. Are we still expecting us upside after seeing 50% uptick already in the last 6 months?
Yeah, so it is into a continuation of an upturn, and today only it registered an all-time high of 835. And for last 3 weeks, we were witnessing that, observing that in fact the stock was not crossing 825 resistance, and that 825 resistance is taken out, and the stock is sustaining above that. And we also know that PSU banking sector have started performing again for last couple of sessions, and that's a good sign. SBI the leader and trading at all-time high. I think the PSU bank rally can continue from here, and SBI could lead. It is a large cap company which is trading at all-time high, and also came out with a very good quarterly numbers also. So fundamentally also the stock looks convincing, and momentum is also there in this particular sector. So I'm expecting this rally to continue. On the upside, this stock can extend its rally towards the 880, 890 odd levels. That could be the short-term targets for next couple of weeks. And as far as support is concerned, I see a strong support around 800 odd levels. So 800 is a strong support, and the next resistance I see is around 880 to 890. So good potential to extend this rally, and this is the best placed chart from the PSU banking space.
Let's move on, talk about the next stock, and this is also an earnings candidate. We have Navneet Education that's in focus after its numbers. It was a good set of numbers that was reported by the company because the revenue growth around a 70% growth in terms of revenues. Even the operational performance has been strong. EBITDA, look at it, it's moved from just 4 crores last year to 86 crores. So operationally also we have seen a very, very strong performance, strong uptick in terms of the margins of the company. 19% now the margins is at versus 1.7%. We also had a brokerage note from Prabhudas Leeladhar that they said that they're maintaining the buy call on Navneet Education. A target price of 182 rupees per share is what they're giving for the company. So yes, keeping an eye on Navneet Education after its numbers as well as brokerages maintaining their call. The stock is holding on to gains of almost 1% as of now.
Alright, that's Navneet Education for you. But on that note, we slip into a break on this edition of Market Fatafat. More stocks on the other side. Don't go anywhere.
If you like this video, then like, share and subscribe to ET Now.